Alright, I'm going to go over the yen and how the trend turned. Basically, how the turning point occurred, and then indications in the yen for the Wyckoff style trader. As you can see, it was in a downtrend. Now, in a downtrend, there are some ways to look for ending action. The trend is ending. So, most people know that you want to look for a climax, you want to look for a shortening of the thrust, and you want to look for a sign of strength. All right, that's one sequence of events. So this is known amongst Wyckoff style traders what to look for. Others will look for a range of accumulation and a breakout, like a jump over the creek. But whatever it is, you have to be able to identify. And a lot of times you have both. So anyway, this is a downtrend. And what's very clear here is a shortening of the thrust right here and a test of the thrust. Now, is there a climax, like a really heavy climax? The biggest wave I see is over here. So I don't really see a climax after that. And sometimes it's not that apparent. So, you have to work with what you get. And this time the market gave you shortening of the thrust. What you see very clear is this 3,000 on this rally down. Now take a look at these rallies. This is 9,000. This is 30,000. This is 26,000. This is 28,000. Right? This is 12. This is 19. This is 12. And now it goes down on 3. That's immediate red flag. Okay, it's immediate red flag. Now, can you say that the trend has turned just because of one indication like that? No, you can't say that. What you can say is that it's a clue. So this is the lowest volume in the downtrend. So this time I've added the indication programmatically. But anyway, the key is look at all the waves: 9, 11, 30, 26, 13, 28, and then bang, low volume on this wave down. That is telling you there is something of interest. And this is another point, is everyone's looking at high volume, but understand low volume is also very important. It's either extreme is very important. And in this case, I like it because it validates the shortening of the thrust. Shortening of the thrust is the indication that momentum is gone. Alright, now can the bulls capitalize on that? That's the question. So it goes down on 3,000, which is the smallest wave in like all of these waves, at the low, and then there's an immediate higher high. Pulls back again to test on low volume. Then you see the breakouts are on the upside. They're on the upside here. And you have 5,000 up, and this is where you have an indication of strength, which is in terms of an effort reward, meaning the pullback double the volume, yet it's not it's small. Why? Because whoever's selling, the other side is buying. Okay, and then it makes a higher high. But still, that may not be as impressive as what happens next. This is very clear effort reward. When it comes back like this, you see how obtuse the angle is, where it goes down on 13,000. So there's effort here, 6,000, greater than the up wave, greater than the prior down wave. But 13,000 greater than the up wave, greater than the prior down wave, and makes a higher low and has a very shallow angle. That's telling you it's effort reward. Okay. So you have breakout like that, and then a breakout on the upside. This is the confirmation. So if you trade F for reward, this is the signal. For those who want to trade it, it gets confirmed, pulled back on low volume, and going right into the area where just offering a test, either here or here. There's nothing really to fear from the bearish side because low volume, effort reward, meaning higher lows on either low volume or high volume. Indication is supply is weak and demand has taken over. Now, one thing is very important. A lot of traders will say, "Oh, what about the rallies? The rallies have low volume also." Once a trend is established, the rallies can have low volume. All right, because supply needs to break the trend, not demand. So the rallies have low volume. Like over here, you have low volume on 7 and pullback on 13. So someone may think, "Oh yeah, this is low volume, it's bearish because it's a low volume rally." No, 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 no. This is ease of movement. All right. Now, if you have a sign of weakness and then have low volume rallies that are up thrusting, that's a different story. But in this case, you already had a downtrend. It's exhausted. It lost its momentum on the shortening of the thrust, and now it's reversing, and the trend is in favorable to the bulls. And the pullbacks are making higher lows, and so at this point, you want to focus on the down waves and see what's going on. And this is really nice because this is F for reward. Now, I'm more of the pullback style, so I want to see the market prove itself. So this is where the confirmation comes in the form of a higher high, and this time it's bigger volume, and it pulls back again on low volume, which is good. And then eventually goes up here. Now in my world, when I see this looks climactic, but it wasn't. But let's just be real here. For me, it's a climax. Now it wasn't a climax. Found out later. It's fine. You're not gonna label every high volume wave on the upside a climax, but sometimes they look, they just look climactic. So you're gonna label them. Doesn't mean you short them. It means you wait for the sequences of supply and demand to battle each other and see, how the turning point occurs. In this case, it occurred with a shortening of the thrust. A shortening of the thrust indicating a lack of momentum, followed by a reversal, immediate reversal, followed by pullbacks, a higher high, a higher low on double the volume, and then an effort reward. This effort reward and this effort reward, this for the bullish traders telling you that the trend has reversed. So the turning point came as a sequence of events that included a shortening of the thrust, higher highs, higher lows, and effort reward. Okay, it didn't come in the form of an immediate high volume wave up. Many times it does that, where you have a climax down and an immediate sign of strength. In this case, the indication of strength came on the sell side, meaning on the wave down, in terms of an effort reward. So these are the variants that that the market gives you, and you just have to be able to interpret them. So over here, this is climactic, but it's not enough to change trend. Goes down on 4, goes down on 6, goes down on 8, goes down on 6. Again, nothing extravagant. Like over here, you have 16 up. You don't have 16 down. You don't have 24 down. You have single digits, 4, 6, 8, and 6. And then you have this 4,000 up. Now, like after multiple waves up, this looking a little fishy. So I'm a little cautious now. Like a lot of folks will see this and say, "Oh, okay, you have a rally, a bull flag, consolidation, and it just came to test, came down in 14,000." But I'm not really liking it because the waves going up like that, like that, to me is worrisome. So, like I like the turning point over here when it's high up like that and doing that, because smart money is they're gonna buy here at the lows, or they'll wait for a correction and all that and then get in. Like over here, it seems a little fishy. So I'm just seeing how this plays out, and this volume here, like that's the biggest volume in one, two, three, four, five, 6 waves. Is that effort reward or a sign of weakness? And I'm not too sure about that. That high up after a wave like that, kind of kind of has me thinking. Okay, so now bring the higher time frame point figure, and you see it rallied, and this is where the break occurred. So it's testing that area. Now there is cause being built, but the volume sucks, and it's unimpressive. Like, so I want to see what happens, but I'm to me, I don't like it. I don't like that effort reward would be that high up. I don't like the amount of volume that came out. I mean, if it was 8,000 or something, that's different, but this is significant. Okay. Anyway, that's a review of the Japanese yen. And that's all, folks. Have a good night.